Good morning, good afternoon, good evening. My name's Dipesh Patel, editor at Trade Finance Global. The Bill of Exchange is an instrument almost as old as trade itself. It was used in international trade as early as the 13th century, particularly amongst the Lombards of northern Italy. 13th century merchants usually kept their money in banks across different cities. The Bill of Exchange allowed them to receive payment as soon as a seller ships their goods by showing a signed Bill of Exchange to a banker. Now, bills of exchange have probably moved from papyrus to paper, but we've hit a bit of a brick wall after that. The next push in the industry to actually make progress from the 13th century Italy is to take these trade instruments digital. I'm delighted today to be joined to discuss the digitalization of bills of exchange and how the BexNote solution, or the Bill of Exchange Note solution, is a catalyst to this end. Delighted to be joined by Markus Ruprecht and Michael Huertas from PwC Germany. Markus, Michael, welcome to Trade Finance Talks.
Dipesh, thanks for having us. It's really great to be here.
Thank you. Pleasure. So, quick introduction. Who are you? Where are you from? And what do you do? Markus, I'll start with you.
Thank you. I'm a senior executive advisor at PwC. Before that, I was a banker for 10 years, mainly in trade. I was 10 years serving banks and corporates in trade and cash management. And for the in between 14 years, I actually founded a supply chain finance platform. But now, as everything is converting and transforming, I joined PwC to get these exciting solutions going.
Thank you very much. And Michael, over to you.
Thanks, Dipesh. So I'm Michael Huertas. I'm a partner with PwC Legal based in Frankfurt. I head up the global financial services legal practice of 450 FS lawyers in 100 countries. Whilst I'm based in Germany, I'm not German. I'm American and Austrian. An English, Irish, and German lawyer by background, and started my career many years ago just off Lombard Street in the city of London, but I've been in Frankfurt for the past 12 years, and I'm working with Markus on the BexNote and a number of other things that are certainly happening in this area.
Thank you very much. And I'm sure that the City of London is where a lot of these paper documents and various bills were actually formed. So quite relevant. And Markus, I guess you've probably seen it all. I'm not saying from the 13th century, but you know, platforms, banks, and now from a PwC perspective. So perhaps over several years of experience. Can you talk me through how the Bill of Exchange has actually changed in recent years, either in terms of purpose or function?
I'm happy to do that because the interesting thing is that, as you already mentioned, it has not changed in recent years up to now. So it used to be very important in trade, as you said. It used to be a very important instrument, especially in Germany, when it comes to refinancing of banks. But because of the cumbersomeness of handling paper, it really went down in importance and was almost forgotten. When you talk to young bankers today about the Bill of Exchange, everybody's getting puzzled, what this is. But now with this whole thing getting digital, I think it opens up a very new horizon, and it's almost a big revolution in the whole industry that is about to happen.
Thank you very much. And Michael, what would you say from your perspective is the scale of the problem with paper documents? We hear about, the billions of paper documents that are lodged in global trade, and for every shipment that comes across, there are documents probably racing to get there at the same time.
Sure. I mean, there's obviously a physical problem of how do you move paper. There's obviously the fact that a lot of legislative requirements in certain jurisdictions still very much hold paper in the highest regard and highest esteem, in particular wet ink signatures on paper. And in the case of bills of exchange, under traditional legislative regimes and regulatory regimes, if you don't have the paper in your hand and you don't have a wet ink signature on it, it's very difficult to complete the transaction. So there are parallels, of course, to wider financial markets evolution. In particular, if you look at the securities sector, and if we hark back to maybe not that long ago, still ages ago, if you look at the 1960s and the paper-based crisis on settlement, that was a catalyst to move to electronification of securities trading. And ultimately, securities trading today, of course, is fully digitalized. Now, with the digital bills of exchange as part of the Meliter initiative, which I think is very timely, it unfortunately was delayed a bit due to the COVID crisis. Meliter obviously is that catalyst for jurisdictions around the world who play a very important role or have the potential to play a very important role in trade finance and supply chain finance to embrace digitalization, either directly or through electronification. So what we're looking at today is, specifically with the BexNote, is how can one use Meliter to leapfrog from the electronification that Meliter pushes for, but then go a step further and look at digitalization of the whole end-to-end process. I'm one of the lawyers that would say, if you can move away from paper, that'd be great. I myself am in a completely paperless office, which was much to the welcome surprise of my wife, who kept telling me I had too much paper around me. Lawyers tend to love to work with paper. The more you can kill paper, the better it is for efficiency and certainty, and also operational ease of a number of things.
Thank you very, very much. I mean, look, you talked through some of the benefits. You talked about the physical problem, and also the wet ink signature problem. I mean, it's you mentioned your wife. I'm currently getting some deeds sent to my lawyer, via post, and that is the problem that's causing the delays right now. So obviously, Marcus, we've talked through the benefits of digitizing commercial documents, and we can reduce cost, we can reduce time, we can increase efficiency. What would you say are the specific benefits pointed at digitizing bills of exchange? And I'm referencing PwC's Germany's excellent white paper on the BexNote here, but can you talk us through some of those benefits?
Well, sure, Dipesh, because having the BexNote or the bill of exchange digitalized, it opens up totally new horizons, what you actually can do. I mean, because the bill of exchange was always on paper, for example, it had a due date where it had to be paid. Now, if you digitalize this whole concept, it opens up, for example, the horizon that the due date is not relevant anymore, but the date when the payment has to be initiated is, for example, based on KPIs. I mean, think of the example of pay-per-use, where you want to have a payment after 50 starts and landings of a plane, after 200 liftings of a crane. All these things can now be changed and adapted into this new world. That's just one example. I give you another very important example when you talk about leasing. I just had an interesting conversation with a guy from a leasing company who said, how can I apply this into my world? And I said, well, that's really easy. I have a car that is leased and I'm paying, hopefully paying 60 rates, installments every month. But how often is it happening that the leasing company doesn't get the money? Eventually people run out of money, can't pay anymore. And, I know in Germany, it's a very cumbersome process that you don't get the money, but you want your car back. And it takes weeks and months until you go to court and sue the guy and, make this happen that you get your car. And I said, listen, why don't you just, instead of having your agreement with the payments of the leasing contracts, why don't you issue 60 BexNotes, 60 due dates in the future every month? And if you don't pay this BexNote, this bill of exchange, you get a title on the day after, and the next day you have your car back. So it's a lot of implication. It's a lot of use case. It's a lot of use cases that we are seeing on this horizon happening, and a lot of potential, as I said, changing the whole industry.
So am I right in saying that that actually broadens and I guess unrestricts the usage of the BexNote, and also as a result of that, can you perhaps expand your pool of investors into the solution, and perhaps increase the fungibility of it as an instrument?
Well, obviously, yes, because this is one of the beauties of the bill of exchange, that it doesn't have to be a bank who is purchasing it. So it can be, as you said, very easily transferred from one to another. It can be a hedge fund that are buying those bills of exchanges. It can be a pension fund. It can be a family office. It can be a bank, but it can also be you and me. I mean, if you have enough money and liquidity, that's an easy thing. So it really opens up the whole industry, and it kind of democratizes the way money and lending is handled in the future.
Thank you very much. And look, we're now flashing the diagram of the BexNote, I guess in practice. Marcus, can you perhaps just talk through perhaps some of the mechanics of how the BexNote works, I guess based on that digital bill of exchange?
Yeah, happy to do this. But let me first mention that the diagram that is shown is just one use case. It's just the application in supply chain finance. Many other possibilities. As I said earlier, we have clients already who are thinking of changing an import letter of credit with the BexNote. But going back to the diagram, as you said, many of the things stay the same. You first have an invoice that is, paralleled by a draft, which is a non-accepted bill of exchange. And whenever the buyer is agreeing that he wants to pay in the future, he's accepting this draft. And then this accepted draft turns into a BexNote, into a valid bill of exchange. And then the supplier at any given time can decide, do I want to keep the BexNote and just wait until the maturity date and then he gets paid? Or in case if he needs the money, he can, sell it on to the bank of the buyer, sell it on to his bank, doesn't really matter. And he gets early cash and better liquidity in this situation. And then, this bank, whoever bought the BexNote, can either again keep it, or as we said, because it's so fungible, can also sell it on again. Some banks might have, some issues on the balance sheet when those programs get really big. So they don't have to package it in complicated ABS programs like it used to be. They can just sell on this bill of exchange because it's so easily traded. So it's a big advantage for all the participants. And then at the end of the day, for whoever has the bill of exchange, shortly before the maturity date, they present it to the buyer, so the initial buyer of the goods who has accepted bill of exchange, and then they will get paid.
Thank you very much. I mean, it sounds pretty straightforward there. Michael, with the various countries in the EU set to implement the model law on electronic transferable records, and Central's MLETR for short, how would you say the regulation will impact supply chain finance programs and also the accounting treatment from a corporate perspective?
Sure. I mean, that's the big question currently that is hopefully up to the new European Commission once it finally finds its feet, which should be happening over the course of fourth quarter 24, to be resolved, right? So as it currently stands, MLETR is in various stages of adoption by European Union countries. The UK, of course, not being part of the European Union anymore, was quite good at putting in place MLETR in the UK, and I'll come back to the UK in a moment. But as it currently stands, both France has moved ahead. Germany is in the process of debating how to move ahead. There are discussions, but I would caveat that they're probably preliminary discussions to putting a pan-European framework around Melito adoption. In many ways, that is of paramount importance to have a pan-European framework. And one of the reasons for that is, of course, that supply chain finance, as it currently operates across the European Union, is exceptionally fragmented, much to the annoyance of those parties that are involved in that space, and in particular, dare I say, much to the frustration of us lawyers that are advising our clients on how to look at all the various different legal aspects that apply in something as simple as having a German buyer of trade finance receivables from a French seller that has an underlying debtor that could be Italian, right? So the moment that you have anything that works cross-border, it becomes quite complicated. Melito, if it is adopted on a pan-European basis, will provide efficiency and legal certainty, and that's exceptionally important to put that overlay on bills of exchange laws, which of course have existed in each of the European Union member states well before the European Union was formed. So each European Union member state, due to its legal or its historical legal evolution, has a concept of bill of exchange. And what Melito will do is move that forward on a non-paper based basis with all the efficiencies that come with that. And of course, putting that into preferably an EU regulation, which would then be directly applicable and not have much national options and discretions in it. So to have that harmonization will certainly put an end to the fragmentation and allow for the much needed cross-border trade and supply chain financing transactions that can be done through Melito-based bills of exchange, or can be done through BexNotes, as Marcus has indicated, will provide that legal certainty. Now, we're still a little way off from that becoming legislative and regulatory reality, let alone supervisory scrutiny being applied in whatever manner for buyer and seller. We're still a way off of that. So what does that mean for the moment? It means that you can either do these transactions under national law, where those national laws exist, or due to privity of contract, so the rights of parties to choose which governing law they would like to have applicable to a contract governing a digital bill of exchange. You can, of course, use the UK's Electronic Trade and Disclosure Act. So you can use the UK's implementation of Melito to, of course, facilitate that transaction, with the full recognition that, of course, you have English law that is enforceable in all of the European Union member states. If you have a judgment that is obtained in the courts in England. So there are some shortcuts that exist at present. To the point that Marcus was making earlier, there is a need for raising awareness amongst willing buyers and willing sellers, in as much as there is a need to raise awareness amongst legislators and regulators. Where I currently see this going is that in order to get this business done, and we all want to get this business done, and frankly, the market needs this business, right, is use what the UK currently has in a continental and European Union context, up until the point where the European Union realizes, wouldn't it be better if we had a European Union solution? And then you will have two regimes that can comfortably coexist, possibly borrowing from one another, learning from one another, but also very much both regimes being open to the world. Now, I would hesitate to say that probably the UK and how it will go about this will probably be more open to certain non-UK, non-EU jurisdictions than the EU might be. but certainly getting the EU, the world's largest single market, up to the level that the UK certainly is at, should be a paramount goal of the current European Commission that's in the process of constituting itself.
Thank you very much, Michael. So you talked about this kind of fragmentation of bill of exchange laws, and I guess make sense because they kind of predate the formation of the European Union, and that's also led to fragmentation of supply chain finance. But the potential for harmonizing MLETR adoption, kind of in a pan-European agreement, could be quite interesting in terms of accelerating the adoption of that specific, electronic transferable documents law. But let's talk about the advantages of BexNote, and Marcus, I'll come to you on this, because you've talked about in the white paper the impact that it can have on companies' KPIs, and you've also talked about some of the businesses and industries that can benefit from its adoption. First of all, can they benefit from that adoption right now, today? And secondly, can you elaborate on some of the impacts and the benefits that they have specifically on those KPIs, and we can talk about regulation and capital requirements after that.
Sure. As Michael said, it can be implemented as of today under British law, which especially in supply chain finance is not any issue at all, because trade is global anyway. Most of the trade that is happening on the globe is actually related to British law anyhow. So yes, it's implementable and adaptable right as of today. So that's the very good news. Talking about the implications it has, when it comes to supply chain finance, you have two big issues that everybody is constantly addressing and discussing. One is how you treat these liabilities on the balance sheet of the buyer. And obviously, none of the buyer wants this liabilities to be changed into liabilities towards banks. So they want to keep these liabilities as liabilities from trade. It is very important that those liabilities stay liabilities from trade because of the rating agencies. So everybody wants to maintain that. So talking about how this is balanced and how this is treated in the balance sheet, in Germany under HGB, there's even a line still from liability from bills of exchange, which is zero right now because nobody uses it anymore. So it's easy under HGB, but also if you talk about IFRS, our colleagues in the auditing department said, well, it will be balanced under a separate line that says, liabilities from bills of exchange, which obviously are still liabilities from trade. And so all these discussions and, going forth and back between auditors, banks, and the buyers are much easier in the future. The second big topic about the existing programs is that most of the times the participating banks have to initiate very cumbersome, very expensive KYC processes because, as a matter of fact, they are buying in today's programs those liabilities, those invoices from all the different suppliers. So every supplier they buy an invoice from needs to go through this KYC process. Now, this obviously means that you only tackle, or you only want to tackle as a bank, or only the very large suppliers, because you need to refinance your KYC costs that you have. So I would say approximately only 10 to 20% of all the participating suppliers are invited to a program. And with the existence or the implementation of the bill of exchange, it gets way easier because you just buy this note and you pay it. So it's a very easy purchasing contract that is the underlying technical instrument. And because of this, it just eases it, but it also opens up those programs to all the suppliers, which is also good for the small and medium enterprises because they now can participate in these programs.
Thanks, Marcus. So just to your first point, and just a clarification here. So under German accounting standards, which are now aligned with IFRS, how does BexNote's treatment as kind of operating capital rather than bank capital improve a company's rating, credit rating?
Yeah, it is actually treated as operating capital and not financial capital, which is what everybody wants and needs.
Yeah. Okay. No, thank you very much. And I guess, Marcus, can BexNote actually improve a company's contribution to then say ESG compliance, for example?
Well, this is a very interesting question, Dipesh, because this is what we also start discussing now. As I said earlier, you have these potentials of changing payments with KPIs. So yes, you can say, if you meet this condition, then you get X. If you meet this condition, it will be Y. Obviously, this is not common under the typically bills of exchange law as it is today, because you couldn't change the paper. But if this is getting digital, it actually opens up a whole different horizon on varieties how you can implement that. And yes, you can say, if you only have X CO2, you get this money. And if you still maintain, your bad habits, you get less. So yes, there are a lot of potential that we are discussing right now. I think, Michael and I are doing this on a very regular basis. And because we realize how big the implications are on the different levels.
Thanks very much, Marcus. Let's just actually talk a bit more about some of the legalities here of the BexNote. And Michael, perhaps I'll ask you this question. So in terms of legislation, what actually is the difference between the BexNote and conventional supply chain finance offerings, perhaps in terms of circumventing the need for individual agreement and specifications and using existing legislation as per the white paper?
Well, I hate to give you a typical lawyer response to that, to say it depends, but unfortunately it does depend on what you're looking at in terms of traditional transactions. I think the BexNote and how it's conceived, and the point that Marcus has raised, there are infinite amount of use cases. The advantage of it is the digitalization. So one step further than just the pure electronification, but really the digitalization, which then drives negotiability, which then drives volumes that can be negotiated, traded, settled using a BexNote, as opposed to just a simple, if you want, electronified bill of exchange. I think we will get to a position where there will be a certain part of the market that may look to move away from their traditional supply chain or trade finance programs or arrangements or other transactions, and use BexNotes as an alternative. Either the alternative is there because it's faster to market and faster to settlement. Possibly there's also a greater advantage that at its core, a bill of exchange is an unconditional obligation to pay, right? That is the absolute core essence that goes back to the 13th century, as you've said, and obviously has been enshrined in the majority of European laws, including the UK. Obviously, the UK's Bill of Exchange Act goes back to 1882, and in Germany it's a couple of years around that mark. And in certain other jurisdictions, it's around that same period, right? So there may be the ability to have that additional sense of I will get paid which will make it easier to run certain commercial arrangements that have been agreed between two willing parties through a digital BexNote. Over time, of course, once the legislative, regulatory, and the supervisory environment evolves in the UK, as well as, of course, in the European Union, and perhaps more so in the European Union, because there's a bit of catch-up that needs doing and coordinating, obviously, 27 member states with their each shared but also sometimes differing legal and market practices. We will move to a greater degree of split between which types of transactions are used through which types of models. And I think that's good, right? I mean, what we're trying to do here, or what the market as a whole is trying to do here, is reduce fragmentation but offer more choice, which can drive deeper liquidity through alternatives that can comfortably coexist. The accounting treatment will obviously have to evolve over time as the as the BexNote becomes more an alternative, just in the same way as milliliter-based transactions also become more of an alternative. And then the regulatory capital position, and apologies if I'm maybe jumping the gun here on one of your next questions, but the regulatory capital position, of course, will have to have some further goalposts put onto the playing field to make sure that, one, the playing field is level, and secondly, that everyone understands what the regulatory capital treatment is, which effectively in this case is more focused on the counterparty credit risk, but also with look-throughs to the underlying aspects of what is being exchanged. So again, not reinventing the wheel, just taking the wheel and making it able to run in a more digital manner, which of course is very welcome. But obviously legislators, regulators, and supervisors need to make sure that that is done in a manner that the markets are safe, sustainable, and frankly also efficient.
Thanks very much, Michael. I guess, Marcus, can I ask you to elaborate on how those BexNote liabilities have no impact on those banks' regulatory capital requirements?
I'm happy to do that. You know, the BexNote, the bill of exchange, is a means of trade. So it's not treated as a bank loan. It's just treated as, you know, a trade liability. So this is obviously what is important on the balance sheet of the bank, but it's also very important on the balance sheet of the corporate, because there it's not a liability against bank, it's a liability from trade. And the most important thing for the corporates is that it remains operative cash flow. So it's not a financial cash flow, it's operative cash flow, which again is very important for the KPIs of the corporates.
And would you say the BexNote can improve, I guess, liquidity management then to that?
Sure, by all means, because, you know, as we discussed earlier, you have the decision, you know, if your liquidity position is very good at the moment, you just keep the BexNote, you just keep the bill of exchange and present it to your buyer on the maturity date. But if you need liquidity and you need more cash in your company, you sell it on. And again, whoever possesses it at this particular moment has always these choices to say, I keep it and I will be paid at the maturity date, or I pass it on because the fungibility is so easy and it's so easily traded.
Thank you very much, Marcus and Michael. And one final question. I mean, what's your golden nugget or piece of advice to companies? Because I guess, you know, they can take advantage of the BexNote and it could probably help them position themselves strategically. What's your top tip and piece of advice for companies who are either potentially using the BexNote or considering using it? Marcus, I'll start off with you.
I think, whenever I had conversations over the last couple of weeks and months with corporates, most of the corporates have forgotten about bills of exchanges because they were not used anymore. When companies realize the big advantages of these bills of exchange, they find use case after use case to implement this. We talked about the leasing example. We talked about the replacement of an import letter of credit. And there are many, many more. The beauty is that you will get paid. You have a very certain, liquidity planning. You know how it's treated in the balance sheet. So I can only, shout out to all these companies, look at this and see where you again can implement it in your cash management, in your cash flows, and in your thinking of the treasury department, because it will have a fundamental impact on the whole industry and how paying and lending of invoices is done.
Michael, what about you?
Yeah, I mean, I would echo that. I think for a lot of business decision makers, it means sort of looking at, again, as Marcus has said, what advantages are there and how can this be an alternative, and really getting to grips with the use cases, but also engaging with other market participants to have an open dialogue about how possibly some trade relationships could move to using a BexNote, whether it's a series of pilot transactions and then ramping that up to something that is more on a recurring basis. Now, in order to get there, and of course, the core essence around electronified or digitized bills of exchange focuses on also the electronification and digitalization of operational systems and controls within financial services firms, certainly, but also non-financial corporates as well, and perhaps more so importantly amongst non-financial corporates. So that means obviously taking a 360-degree view of what the market's doing, but also looking internally, possibly with the help of professional advisors and counsel looking in to say, okay, what can I do to ensure that I can move away from processes that require wet ink signatures, because that's obviously needs to be reformed in order to make this work, how to embrace that more fully, ensure that that is done within the compliance of laws that exist on use of electronic signatures. Again, all jurisdictions, all G20 jurisdictions have laws in place on the use of electronic signatures. Those laws predate what we're discussing here with Melita, but those things need to go hand in hand. And there is a need, again, for continuous education of some of these issues throughout the board, certainly, but then all the way down to really business units that are at the coalface of doing these types of transactions, or where they need to have an understanding. Okay, how do I move a bill of lading to something that is capable of running through electronification of trade, right? So we're not going to get there overnight, but those firms that are serious about it are very much positioning themselves to move to this new reality very, very quickly. So that then raises the question for a number of certainly non-financial corporates. There will be those that will say, I'll wait and see and look what my competitors do. That might work for certain firms. For others, it may well be that they find they're somewhat left behind. They may have more expensive pricing on certain exposures. So the earlier one can get to grips with what are the advantages, what are the opportunities, what are the weaknesses within the organization to fully avail of those opportunities and advantages, while at the same time having conversations with the market, industry associations, legislators, regulators, supervisors. That's quite crucial for the next 12 to 18 months, certainly. as we see more and more jurisdictions bringing Melita compliant laws, regulations, and a supervisory environment online. So now's the time to act, to take advantage of this.
Thank you very much, Michael. I mean, I think you've concluded that spectacularly, and you know, I've not much to add other than, you know, at its core, the BexNote is that unconditional obligation to pay. But if we as an industry, as corporates, as financial institutions embrace the removal of the paper, removal of the wetting signatures, and we move towards this framework, this harmonized framework of digital bill of exchange laws, we can really grow supply chain finance. And I think you've both discussed the opportunity for corporates to explore how the BexNote can really improve supply chain finance strategy from a liquidity management perspective, from an efficiency perspective, and many more across many different sectors. So I encourage our audience to download the white paper, which really breaks this down in a lot more detail, and there'll be a QR code on your screen now so that you can download that white paper. Michael, Marcus, thank you very much for joining us on this live stream. It's been such a pleasure having you on Trade Finance TV.
Thank you, Dipesh. It was really great.